There are also some other risks out there we're seeing right now in the marketplace. One of them is that big UAW strike that actually got expanded some on Friday, at least against two of the big automakers. How big a risk is that for the markets, do you think, over the medium term? I won't even talk about longer term, but medium term.
The risk for inflation in the U.S., and the reason why some of this comes from one of our favorite economists, Nancy Lazar. She noted that since 2016, auto industry productivity has been declining while auto industry compensation has been rising. So that means unit labor costs in the auto industry have been increasing quite significantly. So without better productivity and having wage hikes, this is going to make it really hard on auto industry profitability, which is why this negotiation is so incredibly fierce. The 32-hour work week is definitely not an increase in productivity. So let's just say the UAW gets what they want or something close to that. Then there's a contagion effect because labor across the country, even globally, says, we want that. And that just adds to labor inflation, which is something that I think the Fed is very concerned about, given how tight employment is in this country.
And Peter, we're focused on the auto industry, but it's broader than the auto industry. We've already had the Writers Guild. They're not in talks again now. They haven't settled it. We have the actors. We had UPS. We had the ports. We got others waiting in the wings right now. Is there the possibility of really a broader set of labor issues here that will increase wages rather substantially?
I think we already have it. I mean, the amount of union labor in the country we know is low. It's certainly historically low. Sarah's right about the demands of the UAW and what that may portend, at least for that coterie of workers. But there's a large number of workers in the country that are not unionized, that are also demanding higher wages. And we also know that we've got a very tight labor market, which is frankly the real source of the issue. Unemployment still remains relatively low. It's not rising very much. And that means labor has a stronger leg at the bargaining table. And frankly, they probably should, because the last 10 or 15 years they haven't. So I think that the Fed knows that. It's why the Fed is being tough on rates and why it's not talking about taking them down. And I think why it's going to be higher for longer.
Sarah, right now we have the strike going on with the auto industry. A week from now, it looks like the government may well shut down. A lot of people who know a lot about this say they don't see much prospects of a settlement anytime soon. If, in fact, there's a government shutdown, this would be a broad shutdown, would that have effects on the economy?
Well, it certainly won't be helpful, David, and it creates more uncertainty and also tarnishes the U.S.'s image as a phenomenal country with the most extraordinary economy. And we don't look quite so phenomenal and may have some upward pressure on long-term bond yields as, again, confidence is eroded. So it won't be helpful. We think it's unlikely to happen because these last-minute settlements are more typical, but this happened as recently as 2019, so it's certainly possible.
So what about that, Peter? We've seen this play before, at least in some version. Is this more just for those of us in the news media to talk about it a lot? Does it really affect the economy, affect the markets in your experience?
Well, the effect on the economy has to do with the duration of the shutdown. If the shutdown goes for a month or longer, of course it's going to affect the economy. The government is too large a provider of funds and spending into the economy for it not to be. If it's a short 2 weeks, 3 weeks kind of a thing, it's political drama, it's probably markets drama. I think, Sarah said this, but I think it's right, is that investors will take their risks down. They'll try to have less uncertainty in their portfolio, but those are temporary effects. For the shutdown to have a major effect, it has to go for a long period of time.
One last quick thought, if I could, Sarah. What about oil? Because we did get to start to pay attention to pretty expensive oil again this week.
Up. WTI is, U.S. crude is up 29% from June 1st of this year. That hurts. Oil year-to-date is up in the mid-teens percentage terms. That just adds to the Fed's problem because it's not just crude oil, it's all the derivatives of that, including marine fuel, jet fuel, you name it. So all of this feeds its way into the economy and just makes the central banks, their efforts much more challenging.
Go
ahead, Peter.
No, I'm sorry to interrupt, Sarah, but on oil, I think it's interesting that you had this Ruckhauser piece on.
Right.
Back in that time period, first of all, oil went from $11 to $26. That's a much bigger multiple, number one. And number two is the percentage impact of oil on the economy in that time period was dramatically bigger than it is today.